Take a look at Nifty this year, down 10%. How about HDFC Bank, down 13%. Asian Paints, negative 22%. Bajaj Finance, CDSL, HUL, IRCTC, Zomato. Okay. How about crypto market? Bitcoin is down 53%. Ether, negative 69%. It is evident that we are in a severe correction phase right now. Quite a lot of you started investing during COVID, and your portfolio may be in red right now. Some of you diversified in US stocks. The situation there is same. Amazon, Tesla, Apple, Facebook, Microsoft, Nvidia, Shopify. The question is, as an investor, what should we do now? While some see the downturn as a problem, this is actually a great opportunity. If you are wondering how can you make money, keep watching, and by the end of this video, you will know exactly what should you do to take advantage of this market situation. You need to understand that you cannot time the market. Nobody has done this successfully and consistently over multiple stock market cycles. Catching the top and bottom is a myth. It is so today and it will remain so in the future. Just because the stock market is made of numbers does not mean it moves based on numbers. Not entirely anyway. The stock market moves based on human emotions. Greedy or fearful investors react to the news of the day and send the market soaring high or spiraling down. The human emotion will always act unpredictability to the market swing. As much as the stock market is about strategy, it is also about psychology. It may be slow, but markets always bounce back up. Whenever the stock market stumbles, some investors abandon their investment plan and sell out as the prices continue to fall. Money is an emotional topic, and the fear of loss is the strongest emotion of all. It is difficult and painful to see the value of your portfolio go down with the market into what may seem like a bottomless pit. It feels like you're burning the money and losing your hard-earned capital. The first reaction of many investors is just to sell out everything and take their money out of the market. This is almost always the wrong thing to do. Think long term because the market always bounces back up. It is all about liquidity. You need to automate your saving process. Pay yourself first and transfer the 20% of your salary to your investment account. Cut out all unnecessary spendings. Automate your savings and be deliberate about your investing. Automate your saving and be deliberate about investing. During the downturn, have some cash ready so that you can deploy at the right time. In the downturn, keep an eye on cash flow because liquidity is king. You might have heard cash is trash, but not during downturn. Is it a good time to buy the stocks now or should we wait because we don't know where the market is heading? Have you also thought this question? At least I have heard this question many times. Market situations like these are a great time to buy amazing companies that are down only because the whole market is down and no specific reason of their own. Why? Well, because you know one thing that other people don't. Markets always bounce back up. This is the time to practice the first part of the age-old mantra, buy low, sell high. But you know what is the sad part? Most people don't even start. And the few who do start investing only do when everything is booming and get discouraged and sell their stocks when the market starts going down. You see, nobody can time the market repeatedly. A dip is a good entry point, but it is the hardest to get excited about. So what do? Start investing. If the company is making a profit, the stock price can stay down only for so long. If the stock is undervalued, sooner or later, it will come up to its true value. There is an actual business behind that stock. And the stock price will eventually catch up with the fundamentals of the business. Invest in companies that are going to do good despite the downturn. It means you know these are great companies who will hit their all-time high sooner than later. And they will come out stronger having survived the downturn. Look at business sectors that you understand. There's no point in starting out with companies whose fundamentals you don't understand. Charlie Munger, the famous business partner of Warren Buffett, has argued many times that too much complexity can lead to confusion, which can lead to losses for the investors. Investors are better off sticking to what they know, to their circle of competence. When they invest within this circle of competence, they can take advantage of their superior understanding and seize the opportunity. Invest in companies with a wide moat. So what is a moat? You must have seen pictures of castle with a water body around them. These moats used to protect these castles. The moat I am talking about is a metaphorical one but serves the same purpose. Moat basically means the company has competitive advantage which makes them very difficult to compete with. It allows them to keep generating cash flow, keep making profits, while their competitors struggle to survive. For example, Pidilite is the market leader in adhesive segment. IRCTC is the only company authorized by Indian Railways to issue tickets online. You got my point, right? Look for companies with pricing power. What does that mean? If the consumer will stop using a product just because a company raised the prices, that means the company does not have the pricing power. It means the demand for such product is elastic. If demand of a product remains unchanged even if the price changes, such demand is called inelastic. Inelastic products are usually necessities who do not have a good substitute. For example, tobacco and medicines. So, what should you do? Invest back in the stock market before the economy, as always, bounces back up. So, what amazing companies are you going to invest in during this downturn? Tell me in the comments below. Avoid companies with debt. Companies with debt are in a dangerous territory during a downturn. You must research how much debt the company has and how does it compare to its earnings. Free cash flow is a great indicator of company's health when it comes to debt. Do not invest your emergency fund in the stock market. You may be tempted to invest all your money in the stock market during the downturn, thinking that you are going to make great return. But this may be dangerous as you may need the funds in the short term and you will need to sell at a loss. Even when times are good, you should not invest your emergency fund in the stock market. Do not fixate on losses. If your portfolio value drops significantly, don't despair. This is normal and you are going to see many downturns in your investing journey during your lifetime. But if you are still stressed, you may need to reconsider the risk in your portfolio. Higher equity allocation usually leads to higher return, but capturing them needs greater tolerance for wider price swings. Downturn, market crash, volatility, whatever it may be, you cannot let the fear or the noise on the street drive your decision making when it comes to investing. Unfortunately, too many people think short term when investing is a long term game. Now is the perfect time to double down on your high quality investments and practice patience. The best time to buy is when everything is on discount. Thanks again for watching. I really appreciate all your support and feedback. Click the like button, hit subscribe and press the bell icon. Wrapping it up, this Paritosh signing off.